أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم. Welcome again to the second lecture of financial statements analysis. This is your lecturer Nasratullah Noori. I welcome you all once again to our today's lecture. Inshallah, in our today's lecture we are going to discuss the users of financial statements analysis and the sources of information for financial statements analysis. Also, we'll discuss tools of financial statements analysis in different types of financial statements analysis. But before discussing these new topics, we'll have a short review of our previous lecture, right? So let's start with our review of the previous lecture. Right, so last time we had discussion on the definition and meaning of the financial statements analysis, where we discussed the definition of analysis, definition of financial analysis, and then we had discussion on financial statements, and then we had discussion on the meaning and definition of financial statements analysis itself, the entire phrase, and then we had discussion on the purposes of financial statements. We said that each financial statement has its own purpose. We discussed that mainly the purpose of financial statements is to provide us the information about a company's operations, about a company's financial position, and about a company's cash flow status. And then we said that each financial statement has its own purpose. Balance sheet has its own purpose. Profit and loss statement has its own purpose, and cash flow statement has its own purpose. And then we use the financial statements analysis. We analyze these financial statements to get information, which can help us reach to a decision making or reach to the conclusion of our problem, and then make effective and efficient business decisions. And then we had discussion on the purposes of financial statements analysis. There are lots of different purposes of financial statements analysis. Means we can use financial statements analysis for various purposes. And then we had discussion on the importance of financial statements analysis, that why it's important. Financial statements analysis is important because with the help of financial statements analysis, or with the help of the analysis of the financial statements, we find out the business survival. We reach to a conclusion that whether a business is can survive or not, with respect to solvency, with respect to profitability, with respect to stability, and with respect to liquidity. Financial statement analysis is also very important because it helps us in knowing the past performance of a company, the present performance of a company, and the future performance of a company. And with the help of financial statements, we can compare our past and our present, and then make plans for the future based on those analyses that we have made for the past and in the present. So also with the help of financial statements analysis, we can do intra-company analysis comparison, and inter-company analysis, and industry average comparison. So these three comparisons are also possible with the help of financial statements analysis. So this was our discussion for the previous lecture. Now today's lecture is basically on the users, the sources, the tools and types of financial statements analysis. So let's start with the first one, the users of financial statements analysis. By users, we mean who uses all the tools and techniques of financial statements analysis. First of all, we have to know who uses financial statements. I mean, the financial statements are used by whom, right? So there are two type of people, basically two groups that uses the financial statements and the financial statements analysis. Number one is so the first group of users is internal, and the second group is external. Internal users are all those people, different stakeholders internally, who are from inside the organization. They could be the members of the management, and they could be executives. In management, all the managers and directors and supervisors, they come in management, and executives are chairmen and CEOs and all those executive officers of each and every division of an organization. And external stakeholders could be shareholders or the owners of the or investors. Creditors means the bodies who provide a business a credit, and the bankers, the suppliers, the customers, the regulators, the analysts, and the financial institutions. So these are two types of stakeholders who use the financial statements of a company, and also they use financial statements analysis. So if we want or do not want, these stakeholders will use our financial statements and financial statements analysis in order to analyze the information and then reach to a conclusion. That conclusion could be a decision, and that decision differs from user to user, right? The use of the financial statements, the purpose, and the decision of based on the results of the financial statements differ from user to user. Internal users may use financial statements analysis for different purposes, while external users may use financial statements analysis and the financial statements of a company for different purposes, right? And within this external stakeholder, for example, shareholders may use financial statements and financial statements analysis for different reasons or for different purposes. Similarly, a customer may use it for different purposes. A financial institution may use our financial information and financial statement analysis for different purposes. So it totally depends on the user and the type of analysis that they perform on our financial statements and the decision that they make. Look, regulator's decision is different than the customer's decision. The analyst's decision is different than the customer. So each user has its own use of the financial statements and the financial statements analysis, and their decisions differ from one to another, right? A customer may decide use financial statements analysis or our financial statements to decide whether they should continue with us or they should stop buying from us, right? A shareholder may use financial statements analysis and financial statements to decide whether to keep investing in our company or take out its funds from our company. A banker may use financial statements and financial statements analysis whether to decide whether they should provide us loan or they should not provide us loan, right? So each and every user has different purpose and they take different decisions. Similarly, each division head or manager has its own purpose of using financial statements and financial statements analysis. Executives also use for different purposes. So that's how the information is used, and how the financial statements analysis is used for analyzing a company and to reaching to a decision. So mainly, what do internal users use financial information or financial statements analysis or the information on our financial statements for? They use it for planning, for evaluating and controlling the company's operations. As internal users belong to the company, they are from inside the company, so they will always use financial statements for some type of planning. It could be sales plan, it could be cost reduction plan, it could be marketing plan, it could be different plans. So each plan depends on the person who is planning, right? For example, a person from the marketing department will use the financial information for planning their marketing. People from sales department will use financial information for planning their sales. People from financial department will use financial information to plan for the finances in future. So also internal users may also use financial statements analysis and financial statements to evaluate the performances of the company, and then to put some controls on the company to improve their operations. Now, what do external users use it for? External users use the financial information and the financial statements analysis in order to assess the past performance, the current financial position, and making predictions about the future profitability, solvency, and other liquidity and stability of the company, as well as evaluating the effectiveness of the management, right? So external users, earlier discussed, they could be shareholders, they could be creditors, they could be bankers, they could be suppliers, they could be customers, they could be regulators, they could be other financial institutions, or they could be analysts. So analysts are those people who are professional individuals, and they provide consultancy services to other organizations. For example, commonly everybody is not able to carry out analysis on the financial statements. So the people who are not able to carry out financial statements analysis on the financial statements, or they are not able to get to the information or sources from where they could read this information. So for them, there are analysts in the market. They visit the analysts and they take their advices on certain occasions. Now let's go further. Okay. Pre-awareness of financial statements analysis means before we carry out financial statements analysis, we analyze the financial statements. What should we know, right? What information should we have? What knowledge should we have? So then we are able to analyze the financial statements and make a good use of the analysis of the financial statements to reach to problem solving and decision making. So the first thing is financial accounting. We should be experts of, if not expert, we should have a good knowledge of financial accounting. We should have good knowledge of financial reporting. We should have good knowledge of balance sheet, how it is prepared, what are different elements of balance sheet. Similarly, the income statement, similarly the cash flow statement. Also, we should have knowledge about the accounting cycle, the accounting principles, the standards. There are two main standards which are very famous these days. One is the International Financial Reporting Standard, and the second one is Generally Accepted Accounting Principles. So we should have the knowledge of either one for better understanding and usage of the financial statements analysis. Also, we should also have knowledge of consolidated financial reports, how these consolidations are made. Consolidated financial statements are prepared, and what are the purposes of consolidated financial statements. So if you guys have any question on these things, means you have less knowledge of all these things mentioned in the slide, then you cannot be effective analysts of financial statements, right? So before going ahead and analyzing financial statements, we should have pretty good knowledge of all these things. And inshallah, I have covered most of them, like all of them in the first half of the course. So inshallah, in previous lectures, in upcoming lectures and chapters, we'll cover most of them. And I know that most of you have already studied these things in your previous semesters, like in semester 4, 5, 6. So still, we have a short review of all of them, and advanced level, inshallah, in the upcoming chapters. Okay, so these things should be known to us before we proceed with the analysis of the financial statements. Now, source of information. I mean, from where we can gather information, or we can get information then to carry out analysis of the financial statements, or where can we find the information about the financial statements analysis, or where can we find out the information on analysis of the financial statements, right? So that this information about the analysis of the financial statements could be available in audited annual reports. Audited annual reports mean audited financial statements, right? Each and every company which is registered under the Companies Act 2013 is required to annually audit all their company, including the accounting systems, the internal control system, the management. The entire company should be audited. When the entire company is audited, then they are also required to publish or to prepare an annual report, and that report should also include all the audited financial information. So from there we can get the information of that company, and then we can apply different analysis of the financial statements. We can also have this information on company's website. We can refer to the regulatory bodies, for example, Securities and Exchange Commission. Here SEC, by SEC we mean Security and Exchange, Exchange and C Commission. And we can refer to stock exchange. We can refer to licensing authorities. Like in Afghanistan, we have four main regulatory bodies. One is the Ministry of Finance. The second one is the Ministry of Economy. The third one is Ministry of Commerce and Industries, and the fourth one is Ministry of Information and Culture. These four are the main regulatory authorities who issue licenses and permits. And there is one more, Ministry of Labor Affairs. They also issue permits, and so these are the regulatory authorities. We can, with regards to businesses, the main source is the Ministry of Finance and the Ministry of Commerce and Industries. We can get information about different companies from these sources, and then we can apply analysis on their financial statements. We can also refer to financial press, industrial news bulletins, analyst reports or websites, financial statements of a company, audit report of a company, and business publications. In Afghanistan, there is a business publication by the name of DNA, right? DNA, you can search that on internet as well. It's a very fantastic journal. It's a magazine basically, where it's published, I think, on monthly basis, and it contains a lot of information about the businesses in Afghanistan, and how business is growing, how private sector is growing, what are new developments in the private sector and also in the public sector. So if you have access to that, it's available online as well. Means that we can also have information from business publications. It's the journal, The magazine is Business DNA, right? Business DNA. That's very, very fantastic and very famous magazine as well. Now let's talk about the methods or tools used for analyzing the financial statements, right? Horizontal analysis. It's one of the methods or tools of financial statements analysis. Inshallah, we'll have a separate chapter where we'll discuss horizontal analysis, vertical analysis, common size analysis, trend analysis, index analysis. These methods and tools are inshallah practically will work in future chapters. For each method there is a separate chapter where we'll use the financial statements and financial information of different companies and then apply these analysis. Horizontal analysis, horizontal, right? Vertical. Then we have common size, then we have trend, then we have index, and then we have ratios. Inshallah, we'll discuss all of them separately, one by one. We'll have practical work. I'll have inshallah Excel with on my computer working it, and then I'll give you some assignments to work with yourselves. So we have to learn all these tools, because these 6 are the main tools or methods which combinedly are called financial statements analysis. Means with the help of these 6 tools we analyze the financial statement, or we carry out the financial analysis, right? So we have to understand all of them. Next, types of financial statements. Analysis. So there are 3 basic types of financial statements analysis. Number 1 is called external analysis or cross-sectional analysis. Number 2 is called internal analysis or time series analysis. Number 3 is called external comparison or panel analysis, right? Remember, one is tools or methods of financial statement analysis. There are how many? There are 6, right? And one is types of financial analysis or financial statements analysis. So 3 main types. Means we can use those 6 methods for analyzing in 3 different ways. Right? So the first way is external analysis, second one is internal, and third one is comparison, internal comparison, external comparison, right? So let's see what are these. Let's discuss them one by one. External analysis or cross-sectional analysis is a judgment of a company's performance by comparing it with other same company within the same industry, right? We can use any of those 6 techniques and then compare our company's results with same other company in the same industry. What does it mean? For example, I say Salam University, right? I do financial statements analysis, financial analysis of Salam University. I have results with me. Then I compare these results with another university, right? So what do I have to do? Before comparing, I have to do financial analysis of that university as well. And I will have to choose a university which is of same size as Salam, not small, not bigger, because if it is smaller or bigger, the results are not comparable. We cannot compare the results because the company should be same and from same industry. Same industry means university with the university. We cannot compare a bank with the university because banking is different sector, university is different sector, right? We will compare a university with a university, but the universities should be of same size, of same nature, right? So what if we want to carry out internal analysis, what should we do? We have to first analyze one university, then analyze another university, and then compare the results to find out which one is performing, which one is more profitable, which one is more solvent, which one is more liquid, and which one is more stable, right? Those 4 things. Understood? Similarly, we have internal analysis or time series analysis. From the name you can see that internal means you compare a company's performance in a with respect to different years. Like, for example, you compare the performance of a company over 4 to 5 years. You do not compare one company with other, right? In this you compare your company's performance with respect to different years. For example, you take 1 year as a base year. For example, you take 2018 as a base year, and then you compare the performance of 2019 with 18. Then you compare performance of 2020 with 2018, right? So this is called internal analysis or internal comparison. So what you have to do here in this type of analysis, you have to first analyze all the financial statements of, for example, 2018, get the results, less than the results, then analyze the financial statements of 2018, 2019, less the results there, and then compare analyze the financial statements of 2020 and list the results. Once the result of 3 different years are listed, then compare the results 1 year with another year, another year with another year. Or you can say, you can take 1 year as a base and then compare the other 2 years results with this base year. Then you will have a different result, and then based on which you can take different types of decisions. Next, we have external comparison or panel analysis. It involves both. It's the combination of both internal analysis and the external analysis. It's the comparison of both internal analysis and external analysis, because first you compare yourself with a company, and then you compare yourself with industry average, right? First, you compare the results of your company with another same company in the same industry, and then you compare that result with the industry average. So that's why it's called panel analysis or the external comparison, right? It's the combination of both internal and the external. So that's all for today's lecture. Inshallah, tomorrow we'll have next lecture we'll have discussion on something else. That's going to be the business survival. So I hope this was clear and easy to understand. I hope you learned things from this lecture. Inshallah, if you have any doubt anywhere, if you have any questions, please get back to me. I'll be more than happy to entertain all those questions and help you out with your questions, right? So thank you so much. Assalamu alaikum wa rahmatullahi wa barakatuh.